Coming up in this show, I'm going to bring you my comments on the markets. Arby has a sample of our Future Speak video looking at gold again, and it's following our projections with a good possibility of an opportunity coming. We have a huge announcement, the release of our amazing app, the Market Condition Monitor. You're going to want to see this. And I'm going to bring you stock market analysis. We'll look at key short-term breakdown in the S&P 500 and the trouble ahead. And we're going to give you a cycle analysis lesson on showing what that means in similar patterns in bonds and euro and gold. Tons coming up.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and to look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market investors seemed very determined to be buyers last week, with several early day declines followed by many hours of upside retracements. Overall, getting nowhere, with the indexes now, we believe, on the precipice of a steep cliff. I'll show you that danger ahead in a few minutes. Indexes saw early week strength as that AI frenzy lifted the tech stocks, but economic and inflationary data came in hot, bringing moments of big selling squalls and those big intraday swings. The CPI came out up 0.5%, and that was in line, but the year over year at 6.4% was higher than estimates. And the PPI was very hot. That was up 0.7% for the month versus an estimate of only 0.4%. And that put the year over year at up 6%. That's a pretty hot inflation number versus the expected 5.4%. And retail sales came out best in 5 months. And those very confident buyers did a 180 as Fed heads hit the tape with hawkish comments. Messler came out and said CPI data is a cautionary tale, and the disinflationary effect we've seen is slowing. They said that those conditions that we see are good. In other words, the tightening conditions that they see right now in the financial markets with interest rates going up, well, he sees those as good things. But overall, Mester gave cautionary comments. Bullard, well, he's the one that broke the markets. He says more rate hikes are needed to lock in disinflation. I thought disinflation was a bad word, but they want disinflation, and said that the risks of a replay of the 1970s, if they can't stop inflation, are high, and they're worried about that, and they want to stop inflation soon, according to him. He said, Bullard said that he was in favor of raising 50 basis points in the last meeting. Mester implied similarly, and then they are now indicating that they would support that in March. It was Bullard's comments which hit the indexes hardest. S&P 500 were down about 60 points on Thursday on that PPI news, and then rallied all the way back because those buyers are pretty persistent, and saw the indexes down, well, S&P down only about 10 points. But then as Bullard's comments hit the tape, it fell very fast, very quickly to minus 60 points again. And that followed through early Friday morning as investors have digested those negative comments, with indexes testing key support levels. In fact, the S&P 500 broke those levels, and the NASDAQ got close. The Russell's still some distance, but that's coming because higher rates are going to hurt the Russell probably more than anything. With the S&P 500 breaking down on a short-term basis, for us, that's a big warning. The stock market has entered into that period of risk that we have discussed for many weeks, and the downside phase lasting likely from mid-March into early April. There are other signs of that too in other markets, and I'll show you that in just a few minutes. Investors have clearly wanted to be buyers. There are huge numbers that came out that show the amount of retail buying that had been coming in during this period. And you could see that with the real garbage stocks that they had pushed to the upside. So investors wanted to be buyers, and you saw that as every single day that the market went down, they came in for long hours, pushing the market back up. But that switch has flipped, and the caution flag is up. Stocks for the week, after many upside attempts, are mixed to slightly lower, actually, with those big warnings of big failures, and that coming with the declines on Thursday and Friday. Bond market 30s down about 1.75 points as the 10-year yields move up 13 basis points and getting up to 388, 3.88, and that's in line with our projections. Gold market gold down about $36 into our support buy zone, but we still think that there is a risk of it getting down to about 1,800, and Arby's going to show you that coming up, and in our opinion, that's an important opportunity. And silver down close to 60 cents, similar analysis to gold. It has been weaker and remains so. The dollar up about 0.6%, and also very much in line with our projections. If you want to know what that means in line with our projections, you need to watch Future Speak. That is our weekly show every Wednesday where Arby brings you fantastic analysis on the all of the commodities and indexes, and you'll just love that show. It's our most popular member show, by the way. You can get that by becoming a level 2, 3, or 4 member. Oil down about $4 on the week, coming to an important low in the next week or two. And the question is, will it come down and test that 70 level again? Well, with the recession fears that are out there, that is very possible. All right, so let's move on. I want you to go to askSlim.com and look around at our site if you're brand new and get acquainted. Subscribe to Level 1. It's an incredible deal for 3 months for just $45. And you'll get just a ton of stuff from us, and you'll love that. On YouTube, subscribe to our channel. Click the notification bell, and you'll know when we put videos up. Give us a thumbs up with that, and that means you like the video, and that means other people will get to see it because you said it was good. And on Twitter, follow us at askSlim. Questions on anything I'm going to show you today, anything on our memberships, please write to Matt at askSlim.com. All right, this is a preview of that Future Speak show that I was discussing. We're going to repeat gold this week. We brought it to you last week. The analysis on this is really good, and you get some great lessons on the style of analysis that we do. And again, to watch Future Speak, the full show, because we're giving you a sample now with only gold, and to see the 24 futures contracts and indexes that we analyze, you need to be a level 2, 3, or 4 member. And you'll see that every single Wednesday. Arby, one of the experts in the world in cycle analysis, and he brings you that great video. Arby, show them this great analysis in gold.
And you will see a very clear intermediate term high that has now formed in gold. And on this longer money flow pattern that we have added in here, that is clearly still rising. There isn't any sign that that has gone negative. If we were to lose that 61.8 fib, which on the weekly is showing up around 1750, that would be more negative. That would give us some sign that this longer cycle may have formed a high. Currently, we are holding this 38.2 at 1840, so there is no damage here on the longer time frames. Now, if we shift over to this minor third right here, you will see that it has, in all likelihood, formed a high. Now, this cycle is translating positively. You see how the high formed towards the later part of that cycle. So what we would only look for is a smaller pullback, hold this zone, likely from 1840 to 1797 or so. If that were to happen, this would be a right-hand translation on the minor cycle, and we would look for it to turn up and then move through these old highs at 1975 in that next rising phase. So watch closely how we act over the next month or so. That will tell us a lot about what is going on here on the intermediate term. Highest odds are it would hold that zone that I mentioned to you and then turn back to the upside. If we shift over to the daily time frame, you'll see what's happening. Again, this is what you want to watch for. A left-hand translation will form its high early, and then you'll see that slim ribbon turn neutral and go red as it has, and not look back at the 78.6 fib. So let's say that we formed our high right there, and then we were watching right here for a possible late low. In order for this to be a late low, off of that low from 2.6, we needed to have a sharper move back up through that 78.6 at 1953, right? But obviously that didn't happen, right? What happened was we went neutral and then held negative and are now holding negative for multiple days. So currently the highest odds are this cycle had a 1-bar rally right there, formed our high, and then sold off, which means that this is a left-hand translation with that next low that's only due towards that middle to end of March time period in sync with the weekly time frame as well. Okay, so right now we would only look for rallies to fail here, and that makes sense based on what we have already looked at here in the US dollar, which is likely dips are to be bought. Conversely, we will look for moves up in the euro to be sold, and that would imply that rallies in gold are not likely to hold, right? So all of this is really lining up quite nicely. Looking for a move down into this zone from 1840 to around 1797, as I said earlier, on that weekly time frame in gold. So not a great picture here in the short term, and certainly favors a short side bias, but on the intermediate term, it is likely setting up an interesting opportunity here in gold. So hopefully that was helpful to see that detailed walkthrough for this market.
Just super work on that. And you can see there's an opportunity coming. And I've been talking about being a longer term holder in gold. And you can see the timing that we have talked about, that we thought that there would be a pullback with the stock market into this March-April period. And then that would be a great opportunity. And Harvey did a great job showing that to you. All right, stock market analysis coming up. But first, learn about our new incredible Market Condition Monitor, the MCM, an amazing app to help guide you catch the big impulses in stocks, indexes, and ETFs, no matter your trading style. This is set up where you can just put your trading style in there and it helps you. And very importantly, avoid being on the wrong side. Reduce the risk of big losses with this amazing app. And for a limited time, it's included with level 4. This is a picture of that coming up, but I'm going to show you first what's included in the level 4 top tier of our analysis, and you'll get multiple time frame charts, entire focus list of 84 symbols. You can import and save and view live on your own Thinkorswim platform. Yes, you need to have a Thinkorswim account to be able to get the full benefit of this, but you don't need that for the new Market Condition Monitor. You'll get the askSlim proprietary studies, the Slim Ribbon PO, Reversal Scout, MCI, that's the Market Condition Indicator, and Option Bias Indicator, and more. And you can import all of that and save it on the Thinkorswim platform. And you will get our complete archive of custom chart grids with all of our best indicators, support resources, which include free live webinars, our chart analysis training, Q&A with the askSlim analysts, that we have 4 of them on Discord, and the best practices for utilizing the askSlim custom charts and studies. This full level 4 membership gives you everything, level 3, level 2, level 1, and now included, you will be grandfathered in for the Market Condition Monitor if you do sign up by March 5th. I'm going to give you a little peek of that. Now, if you have any questions, please write Matt at askSlim.com, and you can learn more by going to the askSlim.com website and then click that Learn More button right on the top, and you'll be able to see everything that's included. This is a picture of the new MCM, the Market Condition Monitor. And again, this is included in Level 4 members who are existing or who sign up before March 5th on this great, amazing deal. Matt is going to show you that. I can't do justice just by looking at this. Watch this short video and you'll be able to see this amazing application that we have created and have been working on for many, many months. Matt, show that to them.
All right, let's have some fun and go demo some of the key features of the new market conditions monitor. All right, up on top here, you can see that there are two important views which you can start from. We have our trader view and our timeframes view. The timeframes view essentially gives you the opportunity to look at any time frame that we have pre-established from the 3-minute, 15-minute, 2-hour, daily, weekly, and monthly, and see the current reversal scout and slim ribbon, which are two, as I mentioned earlier, primary and custom momentum indicators that we use reliably to help us understand the momentum of various time frames as well as the specific symbols. So you can see here we have our symbol list, and the symbol list here is fairly broad right now, which includes our focus list of stocks and ETFs, as well as the index ETFs, which you can see here with the SPY, the Qs, IWM, and DIA. And then we have all the major stocks, and we have additional ETFs included in this list as well. So you can choose any one of the time frames. So if I choose, let's say, 15-minute, you can see that instantaneously you will get a read on the current momentum conditions in terms of our reversal scout and the slim ribbon for all those various markets or securities. And what's really great is it gives you a really good visual depiction of that momentum condition happening at that specific time frame. There's a change log that populates the most recent change into this change log here. So you can see here towards the end of the day, there's a lot of securities and symbols that shifted negative in that 15-minute time frame. So if I clicked on one here, let's look at Goldman Sachs, then it narrows into the single symbol, which is Goldman Sachs, GS here, and you have all of the time frames that populate. And then you can even go one step further, and this is really where we've harnessed the power of our proprietary and state-of-the-art momentum analysis to support your trade planning process. So it's really critical as traders that we are able to answer two fundamental questions when you're doing your trade planning. And number one, that is going to be, what's the time frame that you're looking to trade? You know, what's that trader time frame, that trader style that is most comfortable to you? Are you an intraday trader, a near-term trader where you're looking at the next 1 to 5 sessions? Are you a short-term trader looking at the next few weeks? Or are you a little bit longer intermediate time frame trader where you're looking at the next several weeks? And so what we've done is we've established some trader types for you to make your trade planning process easier, or if you haven't looked at multiple timeframes before, to provide you with a guide that gives you a more structured approach to that, where again, you want to select what's that time frame that you're looking at in terms of your outlook that matches up to your trading style. And then the second key question is, what is the directional bias that you want to position your trade strategy selections around? So for example here, if I was a near-term trader, what we've done is we've have this pre-established multiple time frame look here at the daily momentum conditions, the 2-hour and the 15-minute. And what we've done is we've created a sum of the evidence between these three time frames, taking into consideration the middle time frame as the primary directional bias. And you can see here it says the momentum condition in the middle period indicates the primary directional bias. And when further alignment in the other time frames appear, The trade setup condition will suggest an overall position bias. So one, again, is what's your trader type in terms of the time frame, your outlook period, and then two, as you look to position your bias in terms of your trading strategies, you want to know your directional bias. And so what we've done is we have combined our momentum analysis and come up with a trade setup condition that suggests what that some of the evidence current overall condition is. You can see here in the near term outlook for GS right now, based on the momentum analysis that we have, it's slightly bearish. So this is the case that is available for all of our symbols. So I showed you the time frames view. Now let's finish with this trader view, which again is really where we've harnessed the power of our momentum analysis here. And at your fingertips, you have the ability to quickly sort and find and scan for trade setup conditions that meet your needs in terms of a directional bias that you're looking for and a trader type that you're looking for. So right now, this is in the short term time frame trader type, and you can see here that I scan for bullish conditions, and I can sort and find all those that are anywhere from very bullish, which you can see the momentum alignment in the various time frames here for that short term, the 2 hour, the daily, the weekly, are all green, meaning that we have positive condition there, which is going to then generate obviously a very bullish trade setup condition. And so our system, the market conditions monitor, is scanning for those combinations, again, to position you for that next impulse wave, or to let you know that it's not optimal to be bearish or when you have something that has a very bullish or bullish momentum condition. Also, you can scan for neutral conditions. If you are an options trader and are looking for opportunities for some strategies that would help with, say, selling premiums in terms of like iron condors, you have the ability to find symbols that have conflicting momentum conditions, which likely suggest some kind of choppy period. So we do have here, I wanted to give you a sort of a teaser overview of the new market conditions monitor that is incredibly powerful. It is available now as part of our beta testing. We are going to be running a special promotion, which Slim is announcing today.
Just unbelievable. That market condition monitor, become a level 4 member, subscribe to that great deal. The MCM is included at no additional cost. Go to askSlim.com and click learn more, and you'll be able to get all that information, and you will then be able to have the market condition monitor. It will be available to you. Just an amazing app. It will help you so much. So if you want more info, write to Matt at askSlim.com. All right, stock market analysis, S&P 500 short-term view. We're going to look at the 1 to 3 week view, maybe a little longer. First, some little important information. This slide gives you the information on our analysis. So just take a moment to read this. Maybe stop the video and you'll be able to learn about our style of analysis and what's important to you to understand. All right, stock market. We're going to look at the stock market analysis S&P 500 short-term view, 1 to 3 weeks, and maybe a little bit longer. This is a great cycle analysis lesson that I'm going to give right now. And for those of you that have not learned about cycle analysis, please go to askSlim.com. Go to our top navigation where you see workshops and click on Cycle Analysis Workshop. That will then give you an informational video and show you what's in the 20 plus modules of the teachings that I have written. You'll just be amazed by what's in there. So watch the free video on there and you'll get a good idea. So let's now switch over to this lesson in cycle analysis, and then I'm going to show you the S&P 500. So we're going to look at bonds in the TLT, Euro, and gold correlations, and what that means. So this is a TLT chart. We are looking essentially at the 20-year bonds. And for those of you that are brand new, what we do is cycle analysis. On the bottom are cycle brackets. These are simply a guide to help us see the energetic movement in the markets. A cycle is measured from trough to trough. And what it essentially shows you is the repeating patterns of flows of money. Now, the actual formations of the cycle are tracked up on the top on the price chart. So when a chart forms, when a price chart forms a certain way versus what the ideal formation would be, as we look at this in multiple time frames, we get very important information. So when a cycle peaks on the left side of the ideal, as this one did right over here, it's called a left-hand translation. You can see that LH translation listed there. What that tells you is that there are energies that are pushing on the downside and caused an early peak. Then when it breaks the key cycle low support, it is configured negatively. And that says there's a high likelihood that the energetics, in other words, the momentum conditions coming from the longer time frames, the longer components that exist on the weekly chart or even monthly chart, that those are pushing to the downside. What that causes is brief upside rallies and long declines in the cycles. That left-hand translation, as you can see here, was swamped by the negative momentum that occurred. You could see the slim ribbon and the slim ribbon PO and the downside resumption signals. These are included in your level 4 membership if you sign up. This then tells you that as it broke down under this key level where it began that cycle, it was likely to fall all the way through the bottom of the cycle. Just blows your mind when you see that. Then momentum staying negative, you had the next cycle swamped. Just unbelievable. Now something changed in here. And this cycle had a right-hand translation. It peaked way on the right side, and that essentially was swamped by upside momentum. You can see this turn green and that upward resumption signal right there, and that said the next cycle was likely to move to the upside, and moved up here to some very solid gains and then began to turn down again. Now something happened in here. This is a positive cycle, as you can see right in here, and then it rallied and broke that low. It created a left-hand translation. What that was a very early peak and then came down and broke the key low, and it says it's likely to decline to this time frame, which is out here into the second or third week of March. It could have another negative cycle here, which would then take you out to the beginning of April. We're not sure about that, but the key thing that we're looking at in here that we want you to understand are these left-hand translations and the breakdown of that cycle and how that set up this decline that's going in right now. So the TLTs, the bond market, has been in negative condition. Now the stock market has not liked that. In the last year or so, when the bond market goes down because interest rates go up, and then you get this sense that the Fed is going to remain tight. So you had in here this breakdown that occurred and then it moving down. Now, when interest rates go up, then what happens, and you get a negative situation in the bond market, that's occurring, and it brings an appeal to the U.S. dollar. In other words, money wants to go to the U.S. dollar because of the higher interest here in the U.S., and money seeks, to where it can get paid the most. So, and then when the markets are moving down, there's a little bit of a flight to safety bid. That would make the dollar go up against the euro, or the euro go down against the dollar. Let's look at the EUR/US dollar. And the reason I'm going to this is because you can see that the euro, when the dollar fell, the euro put on all of these beautiful cycle patterns. Positive cycle, upward momentum, slim ribbon PO telling you upward resumptions. Fantastic. Look what happened right in here. A left-hand translation, which supports the rising dollar. This is likely to decline out into mid-March again. Interestingly, how that lines up with the bond market. This is a very negative occurrence. See the slim ribbon PO turning red as the slim ribbon gave you this negative signal right there. Remember, these are momentum indicators, and our market condition monitor will give you all of this information by becoming a level 4 member before March 5th. If you're an existing member, you'll already get it. So this left-hand translation is very bad. It supports the rising dollar because the euro is 57% of the dollar index. This says that you're likely to have a rising dollar through sometime in mid-March. Very interesting, because if you remember, we've talked about the stock market period of risk. out into mid-March. Let's look at one more thing in here because we've talked about gold moving down, and Arby showed you this chart earlier in the show. Now you could see the weekly analysis if you then go there and watch that analysis in the full market week show. This is just amazing because you had this beautiful, powerful cycle right over here. These yellow areas are areas where it's likely to correct. This was a very strong cycle, positive momentum. Look at these signals telling you upside resumption by the slim ribbon PO. And now the negative occurrence and this left-hand translation in the gold market. This says gold is likely to decline, probably to the bottom of the support level, or just under 1800. Yes, into somewhere around the second, third week of March. Amazing alignments as you see these negative conditions going on. That is all in alignment with money flowing into the US dollar, out of the US bonds as yields begin to go up, and very, very consistent with the liquidation that is going on because of the sense of a recession coming and higher interest rates. You could see that in light crude also, which is significantly lower here on Friday, down 3 to 4%. So this is all very much in alignment. So I hope that that gave you a good understanding. Now, again, go to askSlim.com, go to our workshop tab, and you can learn more about that style of analysis. But now I want to show you what's going on in SPX, in the S&P 500. And this is another left-hand translation. I'm not surprised to see this. Now, this upper track right over here, and I left this in, we had it labeled as the lowest probability. This really needs to come out because there is your breakdown right over there, and this is your left-hand translation, just like we see in the other markets. Now, I want you to note that we had a positive slim ribbon PO giving you these upside signals. Here was one right over here, and now it's failed. And we've had this number in here for our members, 40, 60, 79. If it got below that number, it is very likely that the intermediate period of risk that we have shown for quite a number of weeks, even months, has now been entered. And that the decline that we're looking for could be, modest, and modest would be down here to 39 and a quarter, another 130 points or so on the downside, down to this support level here around 38.40. That would be a normal projection in here, but originally we had the potential for it to get back down to 3,500, and that discussion needs to be reopened. The only way to change this would be if the market was able to rally above that high at about 41.60. That would heal this condition and tell us that this was false. The probability of that is, based on everything I'm showing you, is probably only about 15 or 20%, with a probability that's in the area of 70 or 80%. That the decline is now set, and that the potential for the movement into the support zone between 39 and a quarter and 38.40 is very likely, with the potential of it being much more severe to the downside. Again, remember, the market always has the ability to heal itself, and that number we would look for would be above that number, about 41.60. This is quite a negative scenario that we're looking at right now. I want to note that the NASDAQ has not broken this level yet. We really would like to see the confirmation of that, and the Russell's even a bigger distance from it. But the Russell has the biggest risk with interest rates going up because it's made up of the zombie stocks, the stocks that have to borrow a lot of money, and as interest rates go up, it's bad for them. So I would not be surprised to see the Russell, the RUT, or the IWM accelerate soon to the downside. You may get some failed rally attempts in here that don't get far, but I think the switch has been flipped and the market has gone from buyers to sellers. This is an important breakdown. The market could fix itself. I doubt that's going to happen. That's a look at the S&P 500. I hope that was incredibly valuable to you. You got a cycle analysis lesson looking at the translations of the market, and I think that that is important. Learn cycle analysis, get our market condition monitor, and you will be very, very well informed and really understand market conditions. I don't think like anybody offers. Please do take advantage of our special that we're running right now. This is for first-time members and upgrades. You will get the new market condition monitor if you sign up for level 4 or you're an existing member by March 5th. So you're kind of grandfathered in then, and you will have that level, the basic level of the market condition monitor with all of this information that you get in there. Go to askSlim.com, go to the top of the page, click Learn More, and you'll get all of the information on this level 4 special, 35% off. It comes out to only $101 a month for 3 months versus the regular $159 a month. This is a one-time use, and it is best to have it with Thinkorswim. That information, you can get more by writing to Matt at askSlim.com. That's it. Go get acquainted, become a level 1 member. You'll get a ton of information from us. Subscribe to our YouTube channel. Click that notification bell. Like the video. Give us a thumbs up. And watch the member videos in the playlists to really get a handle on what we're doing. On Twitter, follow us at askSlim. And any questions you have, write to Matt at askSlim.com. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to